switch. All right, bet. Happy Mother's Day, guys. Happy Mother's Day, guys. Today is May 14th, 2023. And we are going to go ahead and get ready for the week. I went ahead and if somebody doesn't mind, just know we have started doing our 10K giveaway. I asked about it last week on the Market Outlook, and the vote was made that we should definitely do a 10K account giveaway. So I decided that we'll do an account giveaway. We'll do a 10K evaluation giveaway. I might be nice, but we're gonna start at 250 followers on the Instagram page. Or the Twitter page, whichever one comes first. We'll see. We're gonna post it on both Twitter and Instagram. But all you gotta do is be following the Instagram. Make sure you following the Twitter page. Whichever one you want to go for the raffle on, it's gonna be on both of the separate platforms. But make sure you following it. You gotta tag 2 people that need the account other than yourself. Don't be snobby. And you can get a second entry, you can get entered into the raffle twice by reposting the video and not just commenting on it and following us, right? So that's how you can get access to the 10K evaluation giveaway. And yeah, that would be exciting. I'm definitely excited to give back to the community and go ahead and give that account away to somebody. But other than that, man, we're gonna go over a couple of things this week. It's funny because I was talking to T Bizzle. And, I was also watching somebody's overview. Like, I watch other people's overview. I don't just only come on here and talk about, the markets, like what I think is going to happen in the markets. I'm always a student, so I'm always looking at what other people think as well. And, a big part of this thing is psychology, 100%. We're not going to go heavy into psychology this week. That's something we'll definitely talk about in the guild throughout the week this week. And I think I'm going to touch on that a little bit more on Market Outlook next week. But today, we're going to be talking about the phases of the market and how you can utilize those phases of the market, knowing what phase of the market that you're in so that you can actually go ahead and take advantage of that. And I don't want to say predict trades, but anticipate movements in the market. You feel me? My mentor calls them anticipatory skills. You feel me? So we're going to talk about how you can really get those anticipatory skills up so that you are able to kind of have a higher probability of success in the market, right? But of course, the first thing we're going to do is start the top of the week off before we get onto the charts, before we talk about phases in the market. First thing we're going to do is we're going to look at the news, right? We ain't just going to talk about the technicals. I'm 90% a technical analysis trader, 90% focused on the technicals majority, you know what I'm saying? But at the end of the day, the fundamentals, and understanding what I like to say and what I like to understand this. And if you're watching right now, something that you probably want to write down is how to read the room. Right? That's something that I'm very big on, is reading the room. You got to be able to read the room. And that's what the fundamentals are, right? I don't think the fundamentals are just the news or just what's happening in the news. I think the fundamentals are really being able to, like the fundamentals of the market, a lot of people don't understand. And Mark Douglas talks about this. If you're in the server, you can go into the forum and check out the playlist for developing of the proper mindset or a trading psychology. And Mark Douglas, we have the last video I sent in there, some Mark Douglas video, and he's talking about this. And a lot of people, they don't realize that now, because you have the ability to trade on a chart and you have the ability to take trades just on a computer, you're separated from what you're actually doing and what you're actually trading. You're not just trading candlesticks, you feel me? You're actually trading people's decisions, right? Like back in the day when there was actually a trading floor, right? Like when people actually had to go to Wall Street and actually put in a trade, or people had to call the phone and call their broker to put in a trade, that's what's happening, right? You're buying when somebody else is selling and you're selling when somebody else is buying, you feel me? So at the end of the day, if I want to buy at a certain price, that means that somebody has to be willing to sell at that price. And that means that other people also have to think that that's a good price to buy at, right? But at the end of the day, other people could decide, you know what, I don't really like this price. It don't matter what the technicals say. Other people could decide, you know what, that price ain't good enough for me. I need the price to go lower. And the market will wait, quote unquote, go lower for a better price point so that they can get in at that point. And that's what I think the fundamentals really represent, right? Like the news, The news is, yes, it's about the news and it's about the information, but the information that the news gives me, right, given that we're not on the trading floor, hearing people call in every 5 seconds, the information that the news gives me it kind of gives me an idea of what people are thinking. You feel me? It kind of gives me an idea of, you know, where people might want to get into the market, right? Because the technicals, I'm going to explain to you how, and, you know, I'm going to explain to you what to look for so you know when to enter the market, and a little bit of the why. But the fundamentals, understanding people's mindset, aka reading the room, is what really is going to give you the why of entering trades in the market. You feel me? Because you can't just know how or what you're supposed to enter or what you're supposed to look for. You have to know why this is a good place to enter the markets, or why this is a good place for people, why people would want to buy here, or why people would want to sell here, right? So that's the reason that fundamentals are key. Something we talked about last week, you can go on the YouTube channel, and if you're watching on the YouTube recording right now, for this week's market outlook, last week's market outlook, which I believe was May 7th, last week's market outlook, I spoke about NFP, right? Because NFP, we got the numbers back for NFP, and we're actually, you know, which is non-farm payroll for those of y'all who are not, you know, don't understand. NFP, non-farm payroll, it means, you know, all the payroll in the country, the U.S. or whatever country we're looking at, primarily the U.S. is the NFP we're talking about, is the first Friday of every month. And this is where they give us the numbers for the amount of people employed in the country that aren't on a farm. That's why it's called non-farm payroll. But at the end of the day, the numbers that came back last week, we have the lowest unemployment rate. On top of the non-farm payroll, unemployment comes out the same day as NFP. But we're at the lowest unemployment rate as a country that we've been at in decades. It doesn't add up, you know, like there's a lot of people who are, I mean, you know, companies are having mass layoffs right now. Amazon, one of the number one, you know, hiring companies in the world, you know, and in the country, has laid off tens of thousands of workers. Apple is planning to fire tens of thousands of workers, right? Like these companies are planning to do these layoffs because apparently AI is coming to take our jobs, right? That's supposedly what the word is, but somehow everyone is working. And somehow, if everyone is working, that means that everyone has money, right? And if everyone has money, everybody is spending money. And if everybody is spending money, inflation is going to continue to go up, right? And if inflation is going to continue to go up, they are going to continue to put the hurt on people. They're going to continue to raise the interest rates, right? And that is kind of what NFP showed me, right? It's like, you know, people could be losing their jobs left right now, but they going to keep telling us that, you know, they're going to keep telling us that, oh yeah, you know, we're at the best unemployment rate we've been in forever, which everybody's like, oh my gosh, hip hip hooray, you know, best unemployment ever, but you should be worried because that would mean that inflation will continue to rise, which means they will continue to raise your interest rates, your mortgage rates, your car loans, your credit card loans. They're going to continue, your business loans, they're going to continue to put the hurt on people. And that means that all these markets that are raising, right, Apple, Tesla, currencies, SPX 500, NASDAQ, Bitcoin on the way to the moon, that's cute, you feel me? But at the end of the day, if they're going to continue to raise these interest rates, those things are going to crash, right? So that's the reason that it's really important to understand the fundamentals, because I want to understand the why on a higher time frame. And that's the reason that we're going to be, when we dive in here today and you see why I'm looking for this bullish dollar to come in, and you see the way that the market moved last week, you're going to be like, okay, I understand, not just because of these, you know, concepts, not just because of smart money, not just because of support and resistance, not just because of ICT, right? It all makes sense when you really see the bigger picture. You feel me? So that's what we're going to get into. But we're going to start off looking, like I said, at investing.com. That's who I like to look at as far as the news goes, right? So I hope that y'all are with me, man. Hope that made sense. Hope that kind of gives somebody some perspective, because there's really a bigger picture, man. There's really, really a bigger picture. So let me go ahead and... All right, so now let me go ahead and pull up investing.com since I done went and messed up the recording. We're going to go to investing.com right here. All right, bet. So investing.com, this is where we can kind of go ahead and see what's going on for this week coming up, right? We're going to start off looking at the high impact news, right? Red folder news, most important news. We don't want to like kind of overwhelm ourselves with information. And so, yes, this week, oh man, my computer's acting up. Okay. Right. So this week we have Tuesday, Wednesday, Thursday, and Friday. Doesn't look like we have any news release on. Doesn't look like we're having a news release on Monday. So that's something to take note of. Let me close out some of these apps because my computer's getting a little mad at me right now. Don't worry, guys. I'm gonna upgrade to the MacBook Pro soon. I have the MacBook Air right now. She doesn't like when I'm on the server, when I'm streaming to Discord, and when I'm recording. But she gonna have to get over it because, you know, we got work to do. But anyways, Tuesday, we have, and we're gonna focus on US dollar news first. Then we'll kind of, you know, pay attention to, then we'll look at, you know, the other ones, right? But Tuesday we have core retail sales releasing for the US dollar. You know, it gives us the previous, which we came out negative 0.4%. So that means that April or March, March's numbers was negative compared to February's numbers, right? And the prediction from March to April is that we actually grew as far as retail sales go. And if you don't know what retail is, like, that's like businesses, you know, like shopping, clothes, groceries, right? Retail. And so pretty much we're anticipating that pretty much as a country, we're selling more, right? Again, low unemployment rate, more people spending money. So that's Tuesday, 8:30 a.m. We can expect volatility to come into the market that day. Pretty much is why we're paying attention to that, aka big moves, aka highest probability for whatever we're looking at today to play out. Got me? So Wednesday, we're gonna be having building permits. I don't know why that's important, but it got 3 stars next to it. So again, 8:30 on Wednesday or thereafter, right? Between 8:30 to 9:30, we can expect a move to play out that we're anticipating. And then 10:30, we got oil inventories. Now, the only reason I really pay attention to 10:30 news is because, like, sometimes if I see something at 8 and it doesn't play out by 8:30, or it plays out at 8:30, what'll happen is at 10:30, it'll play out again if there's news at 10 or 10:30. So that either makes me be patient and wait till 10 or 10:30 to execute, or it means I need to take profit on whatever I get from 8:30 quickly instead of trying to hold, because they might just go ahead and manipulate the markets. But something like oil inventories, that's not really that deep. I'm just gonna be honest with you. However, on Thursday, right, we have initial jobless claims. So how many people supposedly don't have a job, unemployment again. And Philly Fed Manufacturing Index. Philadelphia is one of the major U.S., I guess you would say, hubs of economic activity. So their manufacturing index typically gives us a good idea of what's going on. And if you're noticing, all these predictions are bullish. Like, you know, we came out at 31.3 for April, negative 31.3 in April, and we're going to be at negative 19 in May. And if you don't know your number scale, that's going up. You feel me? So it's like, that's that. Now 10 a.m. we have existing home sales. That compared to like oil inventories, like I said, it's not that deep. But when you see something like existing home sales dropping 10 a.m., that's an example of what I'm talking about, where you'll end up with the markets kind of running that same playback from 8:30, running back that same entry, and then actually playing out at 10. So really, you could just show up to the markets late, 10 o'clock, and not 10 on the dot. That's like showing up to work on time. You're really late if you show up on time, right? So you want to be there like 9:30, 9:45, and you would still catch a move, just to be honest with you, possibly even the same move, right? Or if you're there earlier in the day, just make sure that you take a short TP, or you take what you get early on in the day, because they may just go ahead and replay that same zone, and you don't want to just give up profits, right? My mentor calls it, pay the trader, right? You want to pay the trader, right? So pay yourself. And then Friday, Federal Chairman Powell speaks. Oh man, I'm excited for that. That's essentially like a replay on FOMC. I don't know if y'all hear the music in the back. That's good for when you trading though. It keep you calm and get your psychology right so you don't go over trading, over leveraging and losing your money. But it's called binaural beats or just high frequency vibration music, whatever the case is. It'll help you. Just trust me. I don't know why. It just works. You can Google it, tell me why, but it works, right? But Friday, we got Federal Chairman Powell speaking. It's the same guy who speaks on FOMC, for example. Head, and I think he might be the president, but he's the head of the Federal Reserve, Reserve Monetary Policy Committee, whatever, right? Those people who essentially determine the interest rates. So if he's speaking on Friday, we gonna get busy on Friday. So I mean, probably just don't trade Friday, or if you're gonna trade Friday, just wait till 11 o'clock, see what he says. And honestly, it's not even about what he says. It's just that the markets will replay the setup, like I said, 11 a.m. So yeah, that part. Now, with that being said, a couple other honorable mentions. We have GBP, high folder or high impact news, GBP 2 a.m. as well. Euro, if you're a Euro trader tomorrow, well, Tuesday at 5 a.m. I'm a Euro trader, by the way. If you didn't know, Euro USD is the highest traded currency. It's the most popular forex pair. It's the most popular forex pair. Euro USD is, even though it moves slow to people. That's just because they don't really know what they're doing. I mean, I hate to step on any toes, but Euro USD will deliver. Okay, it's one of the most popular forex pairs. Now, we're also going to have the president of the same thing, the European committee that determines the interest rates over there, is going to be speaking at 10 a.m. Or maybe that's the president of EU. I don't know. We're going to do some research on that. That's my homework, to find out who President Lagarde is. All right, I'm going to do that. But yeah, so 10 a.m. they speak. So again, good moves throughout the entire morning on Tuesday is what I would anticipate, or continued delivery. And we got GDP for JPY on Tuesday. I trade JPYs, so I'm gonna be aware of that. EU CPI, inflation for Euro drops on Wednesday, so be aware of that. President talking again on Thursday. Man, you sure talk a lot. And then we got the Treasury Committee hearing for GBP on Thursday. CAD news on Friday. So yeah, man, it's gonna be it's a clean week to trade, right? I typically tell my team, like, yo, just don't go hunting for the press, the advertised and the marketed news releases like CPI, FOMC, NFP. Like, that's for the birds, man. Like, you want to let everybody lose their money and then step into those markets right after. I mean, we got a couple strategies that you could catch the move if you're experienced and you know what you're doing. But if not, just in general, everybody doesn't have that experience. Like, I'm just gonna be honest, just majority of people don't put in the level of work it takes to anticipate those type of moves. So really the best bet you could have is just wait until 10-15 minutes after the move, when all the dead bodies are on the floor, and then you can come in and take a setup. So other than that, a week like this, it's all a bunch of mid news. You know what I'm saying? Like, just things that most people who don't really trade, they will come hop on these charts, NFP, FOMC, CPI. They will come donate their money, tithe their money on those days. But this is for the real traders. You know what I'm saying? So, my mentor, he says NFP stands for not for professionals. I don't know, man. I just work here, right? But that's what we got coming up this week. So we'll keep that in mind as we go ahead and kind of do our analytics for this week. Let me actually write down that homework. See, I take notes, you feel me? Who is President Lagarde, right? Because they talk a lot. They be talking a lot, right? So we're going to go ahead and pay attention to that. Yeah, that part. We're going to pay attention to that. And that's all I'm going to go over right now. I will say honorable mention is just like, last week we spoke about, let me close out some of this stuff. Right, last week we spoke about long-term investments. Go watch last week's video. Leave a comment if you have any questions. I'll go back over those things. I won't really do it today. But we spoke about long-term investments last week, stocks, crypto, and that was May 7th video. Now, I would implore you guys to go do some research on the metaverse, right? Do some research on Sandbox, Mana. I just learned about a new one called Medicaid, right? Do some research on those, because I mean, it has use case completely and totally outside of crypto, right? You know, that's why I said that I'm dollar cost averaging into it. I could be wrong and they could drop and I'm still gonna dollar cost average in and continue to buy on the metaverse. If you do your research on the charts, you'll notice like even when cryptos were booming this year, metaverse was chilling. And even when crypto was crashing in 2021, after we hit all-time highs, metaverse was still skying for a little bit before they dropped. So, you know, you just want to pay attention to different things like that when it comes down to it. And as far as the crypto news, of course, you can go to coingecko.com, do your research on those, and you'll be good, man. But that's all we're going to do for now, as far as as far as the news goes and research wise, and that part. Now, yeah, we'll talk about this gold setup I took on Friday. It came back to my break even, so I'm not in this trade anymore. So I'm gonna delete my risk to reward parameters. But I did hold over the weekend, hoping that they would deliver to the lows. As you can see, I mean, this is just straight, you know, just straight clear liquidity sitting under here. And like I said, I'll go over that, you know, in a second. But yeah, we'll go ahead and delete this because I'm no longer in this setup. It hit my break even. But yeah, that part. We're going to start off looking at the dollar, right? Because we didn't really give the dollar too much attention last week. This was the Sandbox. I actually, like I said, I talked about this last week and I sent it out for the server. I talked about it in the forum for the server a couple weeks ago. I went ahead and bought me some. And I was talking about seeing Meta come down into this range here, right? Come down into this range here, this fair value gap, if you know what that is, right? Seeing them come down into this fair value gap on a weekly where the eye was and giving us a rejection and bringing us back to about 75 cents, 80 cents a coin from 50 cents, which, I mean, that's about a 75%, you know, return on investment, about 75%. So I think that would be pretty smooth, even if they don't go for all-time highs, which the all-time highs on Sandbox is about $8.20. So like, if you really understand, like buying at 50 cents, like I could care less if it drops a little bit. Like all-time highs are $8. You understand? So that's the reason we dollar cost average in. You know, this is just a good zone to dollar cost average in. And if it drops lower, great. I'll buy at 25 cents. I could care less. But just wanted to go ahead and point that out. And for all of my students, right, for my students of the game, right, for those of y'all who are learning and paying attention to these concepts, you know, you can kind of see the way that we traded into that zone. We took the lows, right, liquidated the lows, engulfed higher, traded back into the order block here, right? Order block being the last down candle right here. It was the last down candle before the engulfing. And they traded right back into that thing and gave us another one, right? Traded back into it again, right? Into the last down candle here before the engulfing. And now we're having another extension. So if I go ahead and see this thing come up to 52 cents, I'm telling you right now, I'm dollar cost averaging it again at 50 cents, right? So I think we're at a very nice level when it comes to that. And I would definitely pay attention to that, right? I would definitely pay attention to that. My bad, guys. I didn't switch over on the server. My bad. All right, cool. So y'all should be good now. Thank you for putting that out. All right, but I was pointing out for the server. I'll run it back for you guys. Right, you know, we was talking about this fair value gap last week on Sandbox, and like I said, you know, all time highs on Sandbox are $8, and you know, $8 and what is that? $8.48, $8.50, $8.50. I mean, we're getting in at 50 cents. I could care less if they drop down to 25 cents. I could care less. Like, I want all time high. I mean, this thing is gonna, yeah, they're going to, yeah. Like, this is the future of video games, guys. Like, video games, they're not about to be building video games, you know, in a box, right? So I'm okay with that. And so I was just pointing out we came into that. And for all the students of the game, you go down to the 4-hour chart and see how we reacted in that zone. They came down into that zone, gave us a low, last bearish candle before the drop, right? and then they swept those lows, gave us the engulfing entry, boom, right here, traded right back down into the order block, gave us another engulfing, okay, came back down again, right, to the order block here, bang, right, and gave another opportunity in their engulfing. So if I see them go ahead and close above these highs here, right, if I see them close above these highs, then that'll be a sign that, yeah, we're going back to the upside. And I'll go ahead and continue to dollar cost average in, right? That would be a higher high on the daily time frame, and we'll go ahead and get with that. So that's the only update that I have on Sandbox. I'm not going to go too deep into them right now, but we are going to go ahead and hit, right? We are going to go ahead and hit the dollar. So now when it comes to the dollar, we spoke about this a couple of weeks ago, right? Dollar is rating these highs here, right? Is rating these highs, all this liquidity sitting above these highs. You know, we got a high here, the dollar is rating. We got a high here, the dollar is rating. We got a high here that I mean, that would be the highest one I could see them rating if they are going to give a pullback, because I can't see cryptos, stocks, I can't see them getting one more push up, right? They're showing lower unemployment numbers, right? They're showing, you know, they want people to be investing into these markets so that they can respectfully take their money. So I can definitely see the dollar giving us another drop before we actually take off, or, you know, seeing these stocks, cryptos, all that going a little bit higher before their sell off. But just really want to pay attention that dollar is going ahead and taking these highs. And then once we take these highs, we'll see whether we're just straight bullish, right? Whether dollar just wants to really just straight tear higher above. You can write down like 106, right? If dollar gets above 106, she's probably not coming back. Just going to be honest, right? If we get above 106, we're probably not coming back. But if not, then yeah, we could see a bit of a little bit lower before we trade higher. And the reason I say 106, right? If you look on the monthly time frame, right? If you look at the monthly, 106, if we engulf 106, which is here, we would have just created a monthly order block, right? Right, like that. I mean, they take that becomes support. We're not coming back below that. We're gonna go ahead and take those highs, as far as I'm concerned. Okay, now that's kind of what we see coming in on the dollar. Now, before I go like dive more deep into my analysis, like I said, I want to break down something really simple to you guys. All right, I want to break down something really simple to you guys. Me and QB talk about this a lot, right? We talk about this a lot when we were breaking down the chart. Mondays and Fridays, guys, we do Q&A. We do Q&As in the server, right? Mondays and Fridays. Why do they exclude farmers? Okay, I didn't see that. That's a good question. That's a good question. I'm gonna write that down, right? Why don't they include farmers? In an NFP. Give me homework. Give me homework. I'm with it. I'm gonna find out, right? But in my mind, like just using like, you know, like just kind of like using my deduction of analysis, it's like I feel like farmers are like in their own realm of society. You know what I'm saying? Like they ain't Wall Street. You feel me? Farmers, they not Wall Street vibes. Like that ain't the same as when we talking about, you know, these corporations and stuff like that. Farmers probably, they got their status corrected, and if you hip, you know what's up with that. So farmers, you know, they probably don't want the farmers up in that thing. So that's my assumption. That's always been my assumption, is that the farmers not on the same type of time as the corporations. You feel me? But I'm gonna do some research. I'm gonna look into it. So I'm gonna find out who President LaGrade is and why he talking all the time, and I'm gonna find out why farmers aren't included in NFP, man. You know what I'm saying? Don't say math, don't figure it out, man. We gotta ask questions in this thing. I love it. Now, with that being said, right? Check this out, guys. There's 4 phases to the market, okay? And when it comes to institutional concepts, it's very important that you know what phase of the market we're even in. This is kind of bothering me. How do I move where this is? But yeah, it's important that we know what phase the market is in for us to really be able to utilize these concepts the way that we want to. All right. Can I not make that thing go away? It's kind of crazy. We're going to figure that out later because it's going to take up time. But yeah, it's important when it comes to these concepts. It's important to know what phase of the market we're in, so you know what to target when you're, you know, executing, right? So 4 phases of the market, of market structure, however you want to deduce it, right? 4 phases of market structure. Okay. All right. First phase, not in any specific order, right? But the first phase, we'll say consolidation. All right. First phase of the market is consolidation. It looks like this. Yeah, it looks like this, right? When the market is just going back and forth, I'm acting like I don't have a mouse plugged in today. Let me use it, right? Right, that is what consolidation looks like, right? That's the first phase of the market. It's when the market's just going back and forth. We're not going in any specific direction. But what you want to understand about consolidation is that what they're doing in consolidation is they're accumulating orders or they're distributing orders, right? It's one or the other, right? But accumulation, the idea is that people are building up orders at the top, and people are accumulating orders at the bottom. And in order for smart money, right? In order for big money, right? These banks, these countries, whatever the case is, in order for the interbank system to really be able to deliver their money, like they have tens of billions of dollars, they can't just do it in one move all the time. It would look ridiculous, right? They need orders in the market. They need people selling and they need people buying. And when you consolidate, people get a little anxious, right? People sell, they buy, they sell, they buy, they sell, they buy, and it accumulates money above and below, right? Bang. Right? That's what happens in consolidation. Money accumulates on both sides, right? So that's what you want to understand about consolidation, right? The keys to it is accumulation. All right. Now, usually following consolidation, we'll get some sort of expansion or reversal. But a reversal is just an expansion in the opposite direction, right? Expansion is an impulsive movement in the direction of the trend, right? So that is what an expansion will look like, right? So an expansion will look like this, right? You'll see them probably take liquidity on one side, right? Run orders here so that they can come into the market, because if they want to buy, they need somebody to be selling to them, right? So either there's going to be people ready to get into sells when a support gets broken, or there's going to be people who have stop losses on a buy below here, and when you get out of a buy, you're selling, right? Again, if I wanted to buy something at $97 and the market decided, they didn't want to buy at 97, they wanted to buy lower, I might not be ballsy enough to continue to hold my buys as the market decides it wants to buy down at 95. And so I'm going to sell my orders and say, you know what, I'm out. And that's when the banks will want to decide, hey, I'm going to buy in because somebody's willing to sell to me, right? And what they'll do, they'll buy in under the accumulation and you'll get an expansion, right? Now, this expansion just did two things. It just took us out of the consolidation, but they took sell orders on the bottom. And what happens is as they cross the top, they're triggering buy orders. So people are coming in to buy orders. And there's people who had stop losses here on sells. And if you have a stop loss on a sell, to get out of your sell, somebody has to be willing to buy. And so as they're crossing out these sell orders, you get a massive impulse, right? Because a lot of buying is taking place on the banking side, but you got a lot of people who are sitting in this accumulation that are losing money now, and they decide to get out. And so you get a massive expansion, right? And so that is what expansion is, right? That's what that expansion phase looks like. Now, what you want to understand is that once this happens, this makes the consolidation, whatever time frame it's on, it now creates what we call, right? Let's see if anybody could guess, right? It now creates what we call, on a bigger time frame, this consolidation won't be consolidation. It'll just be one candle, and we call that an order block, a block of orders, right? It should just like make sense. Like people try to make it sound like really, like just like really smart and just crazy because they just want you to be dependent on them. But it's just a block of orders. It's literally an order block, right? And so what happens is now you have an order block, and typically the best way to trade an expansion, as you become more skilled, like I said earlier, you'll be able to catch these opportunities on an expansion, right? We call them in the ICT universe, we call them turtle soups, right? So over time, you'll be able to catch these type of entries where you catch the very bottom. The best entry on an expansion is going to be the order block, right? So I want you to write down, and I want you to understand that the best use case of an order block is for expansions. Okay. So basically, as we're breaking out of this, here, like so, what'll typically happen is that the next candle, right? That next candle, it will open up. It'll trade right back to the order block, dig into it a little bit maybe, but it'll trade right back to the order block, and then we'll get the true remainder of the expansion, right? So that, as a beginner trader, that right there is your ideal entry, right? As a beginner trader, is to let them show their hand, to let them show they took liquidity on one side. You see them engulf the order block, and then you want to identify, okay, we just came out of a consolidation, we're going into an expansion phase, I'm going to execute on the top of the order block. This applies to the monthly, this applies to the daily, it applies to the hourly, it applies to the minute, it does not matter, okay? So that is the way that you would utilize an order block in an expansion, okay? Hope that makes sense, all right? And like I said, we do Q&As in the server Mondays and Fridays at 6 p.m. Eastern. So you can refer to this video, hop on, and I'll go even more in detail for you guys. I just want you to be able to get it as I'm kind of going through it today and I'm looking at my own chart. You feel me? Now, what happens after an expansion phase? So expansions are for order blocks. Bang. Okay. Now, what will happen after the expansion is the market will go into a retracement phase, right? Now, a retracement phase is where I'm going to ideally use, give me 1 second, guys. I need some water. I'm giving some game here. I'm giving fire right now. This is some fire. Fuego. All right. So after the expansion, typically you're going to get a retracement phase. All right. A retracement looks something like, and I'm going to change the colors. Where's my colors? Oh, I can't do it yet. Cool. No, it's no problem. No problem. All right. So typically after the expansion, we'll get a retracement phase, and the retracement will look something like this. Bingo, bang. And they'll trade right back into, you guessed it. Sometimes they'll come into the order block and they'll sweep the entry you had before from the order block, because again, orders, right? Sell orders here, people who got in on the expansion like you, right? Don't think just because you know institutional concepts, don't think they won't sweep your stop loss. You got institutions, it's kill or be killed out here. I'm gonna just be honest, like this is hunting. Right? You got to hunt for your food. Nobody's going to give it to you. Right? So they will damn show not just your stop loss, because they're not hunting you, just to clarify. They're hunting other big institutions. They're hunting private traders that are trading millions of dollars in funds. Right? So there's somebody who took that buy just like you. Maybe they don't know what we know, but they took that buy and they have stop losses at that order, right? That you got in before. And there's typically a little gap, right? And your gap will either be, inside of the order block still, because inside of an order block, you will find these gaps. So let's say on the monthly time frame, you might have an order block, but when you go down to the daily, inside of what was an order block, you'll see a big gap, right? A gap being there was price only traded in one direction during that time. And so retracements are for fair value gaps and imbalance. All right. So what you'll see is the market will fall from it. Matter of fact, I think the best way to show this to you guys, right, is the same way we had this consolidation here, right, on a lower time frame, right? On a lower time frame, the market will do what? It will distribute and accumulate orders here, right? And they will sweep one way, and then they will quote unquote expand on a lower time frame back down. Okay, and your fair value gap will either be inside right above, right? So I might take an entry on that, and if you lose, you lose. Or they may be aggressive enough to come all the way down to the original gap, right? And then go ahead and trade higher from there. But for right now, we're going to go ahead and leave it at that because we're talking about a retracement phase, right? So a retracement phase will typically look like that. And I'll change the color to red, right? So we'll usually get an accumulation, liquidity sweep, right? And usually, again, this would have came after a drop of some sort in the first place. And then you get the turtle soup, you see them go higher, and then they'll trade back into the fair value gap, right? So retracements are for fair value gaps, right? Fair value gaps, right? Retracements are for fair value gaps / discount / premium, okay? I'm not gonna go heavy on discount, premium, and stuff like that today, but I can. Like I said, Mondays and Fridays, just hop on 6 p.m., ask me whatever you need to ask me. But typically from this low to this high, right? The market will, and look at that. I just be knowing, right? And look at that. The market, what it'll do is it'll come below the 50% of that move, right? So if we had this big expansion, halfway of that move is where the retracement is going to want to come to, right? And anywhere below that halfway is what we call a discount, right? Because let's say that you were looking to buy something, right? Let's say you were looking to buy something down here at, I don't know, like, let's say this was at $10, right? Let's say the price down here was $10, right? And then price expanded up here to $20, right? If you're a buyer and you saw price at $10 and price is now at $20, you are in disbelief. Like, what do I look like paying double for what I could have bought for $10? So most buyers, they're going to be enticed after a certain amount of discount, right? Think like a business owner, right? And so that discount is usually 50% off. If I'm selling something to you for 50% off what it was going for last week, you're going to be more enticed to be a buyer, okay? So there's two ways to play a retracement. If you're in an uptrend, you can wait for them to come back into what we call a discount, right? As a beginner, that's how I would, really trade these concepts. I wasn't confident in fair value gaps. I wasn't confident in the sell side liquidity sweeps and stuff like that. As I wasn't even confident in order blocks and expansions. As a beginner, my bread and butter, the way I passed my first few evaluations was just waiting for them to give an expansion, and then I would trade the retracement off that first expansion. And I would trade them coming back into the 62 to the 71%, and then I would execute off of that, right? Into another, you got it, expansion, right? So let me go ahead and move some of this stuff over because it's not letting me scroll my chart over anymore. But just let me know if if you guys are, if for those of y'all on the server, for those of you guys watching the YouTube video, if this is helping you, get these concepts even better, leave a comment. You can join our server. We have a free side to the server, but to get access to the Q&As and hop on with us in the Q&As or hop on in the forums, you just go ahead and join the server. The link is in the bio so that you can get access and just come learn with us. You feel me? But I hope this is kind of giving you some clarity because these concepts are really not that hard, right? Like I said, it's just a lot of people who just make it harder than it is because they really can't, maybe trade or because they want you to be dependent on them. Who knows? I don't know. I don't know why. Right? But this is how I understand it, and it helps me. Okay? So that's the first three phases of the market, right? We have consolidation, expansion, and retracement. And I want you to understand that honestly, those are the three phases of the market. The fourth phase of the market is really just these three phases, again, in a change of direction, which is a reversal, right? And so typically, typically the way that a reversal will work is just like what we saw right here. You'll get a turtle soup, okay? And then you'll see the market go in the opposite direction. So I'm actually going to go ahead and give this reversal play as if we were coming this way, right? So let's say that the market was doing everything I just explained to you guys, but it was going down, right? So let's say we were going lower, and they traded back up, and they came lower again, and then they boom, and then boom, right? We came into something like that, right? Typically, the way that a reversal will happen, right? Right? Typically, the way that a reversal is going to go down is that you're going to have the market trending down, for example, and then we'll go into a bit of an accumulation so they can accumulate orders, right, on a lower time frame, and then you'll see them fake as if they're going to go lower. That's why we call it a turtle soup, right? Because most people who was trading this sells, right, they get a little antsy in this. They take their sells up here, they're feeling good, or maybe they didn't and they kept getting stopped out in this consolidation, and they see the market break out down here. So like I said earlier, they take the sells down here, and this is just a liquidity sweep, and you'll see them then sweep and then expand back the opposite direction, right? So the way that you would identify this is by using these four phases on a higher time frame, right? Because what I just showed you, right, on a lower time frame, this retracement is considered a reversal, right? So the same thing that I just pointed out here happened up here on a lower time frame. On a lower time frame, we were in multiple expansions. On a lower time frame, we were trending up, and then the market consolidated, and then they swept liquidity one direction, dropped below, traded back into the order block or consolidation, and then they went ahead and traded back down into our fair value gap, right? So these four phases of the market are just playing out over and over and over. And once you identify what phase of the market you're in, now you can actually go ahead and identify which one of our tools you should use. As a beginner, I do not recommend you trying to trade consolidation and expansions and retracements and reversals. You are going to lose your mind. And if you're not like me, like I have tough skin. Like I can lose my mind and I'll be okay. Like I'm cool with it. Like I get it. Like I know what's going on. Like they're messing with me, and that comes down to the psychology. Like I said, if you're in the server, use the playlist for developing a professional mindset and a money manager's mindset. Use that playlist to develop your mindset, and maybe you could survive these. But look, you don't need to be like, I just have a desire to be able to teach people this stuff. So I know all of these different ranges, but if you're somebody who's just looking to come in here and get funded, you're looking to just make money, like you're not here to just make friends and stuff. Like you're not here to just be able to show off on Instagram and say, hey, like I'm making some money. Like, oh my gosh, like look at me. Like I can make money. Like that's not what your goal is. You feel me? Your goal is to be able to make money. Like to be able to pay your bills, to be able to live your life. You feel me? And maybe start a business. You get what I'm saying? So the main thing you want to do is just pick one of these moves. Is it going to be the expansions? Is it going to be the retracements? Is it going to be the reversals and turtle soups? What speaks to your heart? Like what speaks to the way you think, to your ability to process and to your comfort level? You feel me? Like what speaks to that? And then just stick with that. over and over and over again until you withdraw. All right. So that's the way that these would work. And then, of course, just to kind of finish out, what I'm explaining here, right? After the retracement, you will see another expansion, right? And that expansion will typically take us from, again, the order block, right? When I, a big part of being able to use these concepts is not just knowing where to enter, you have to know where to exit. All right. So whenever we're trading in an expansion, it's funny how I did this by accident, right? But whenever you see us coming, we get an expansion from an order block, the target of an expansion is always going to be previous buy side liquidity on a bullish market. In a bearish market would be sell side liquidity. But right here in the past, I did that on accident. But guess what? In the past, we left a high there, and above that high is what we call buy side liquidity. Right? Why? Because of the same thing I explained about accumulation, right? There are people with stop losses above this. There are people who have buy limits above this. And so the market is going to want to deliver to that place. So if you get an entry from an order block, your next target is going to be an area of liquidity, right? If you get an entry on the retracement, it's really the same thing. Your entry is going to be a previous area of liquidity. But as a beginner, I would just target coming back to where you entered, like coming back to where the retracement began, right? So you can have your first take profit right here at what we would call a mitigation level, right? On the retracements, and I'll make this one blue. Uh-oh, we freezing up. Man, yeah, we're gonna have to upgrade this thing soon. It's crazy. Sorry, guys. All right. Right, so the blue line is the target for the expansion. The red line is the target for the mitigation, for the retracement, right? Because they could come back there, and this could turn out to now be a reversal where they would take the highs and then turn around, whatever the case. So many weird things that can happen. But just as a beginner, until you're able to confidently identify that, you would enter with your stop loss, stop loss below, the lows of the accumulation. And your TP would just be up there at the mitigation level, and you're good, right? On the expansion, your entry would be on the top of the candle. You feel me? Your stop loss could be all the way down here, but it doesn't even need to, right? But the bottom of the order block, they really shouldn't come to halfway of that order block, and then your TP would be above previous liquidity, or even, all the way up there above the liquidity levels up there, right? But as you can see, I'm not gonna lie, some of the best trades you're gonna take aren't really on the first expansion. Some of the best trades I've ever taken are really off of the retracement, where they go ahead and come back, and when they go ahead and come back, and I can get a really tight stop loss, and then I can just target the real expansion after that, right? So those are the 4 phases of the market, guys. Hope that helps. I'm gonna go ahead and screenshot this because it helped me. Shoot, you know what I'm saying? Your boy is good. Boy is good. What can I say? I help myself sometimes, right? So I'm gonna screenshot that. Recommend you guys go ahead and screenshot that, right? And let me go ahead and now I'm gonna go ahead and delete that, or we can leave it there for right now. And I'm gonna go ahead and go to my dollar chart. And as we wrap up, I'm gonna apply this to the dollar, right? We ain't gonna wrap up right now. I want to get into my pairs, so we ain't gonna wrap up right now. But I just gave you guys some good sauce, right? So similarly, right, if you look at the dollar, and I look on a monthly time frame, right, on the dollar, yeah, I'm gonna use that chart we were just on because I don't want to delete the other chart. All right. So looking at the dollar, right, you can kind of tell this same thing that we just talked about play out. Excuse me. Right? You can see that we had consolidation, right? A level of consolidation here, right? Even to the point of, this whole thing being a consolidation. But I'll just use this for an example right now, right? So you see that they consolidated, accumulated in other words, and then we saw them go ahead and take the lows, liquidity, gave us an order block out of those lows, right? Here's your order block. You saw them trade right back into the order block, stop loss below the 50% of the order block, and then they expanded above the highs, right? And then they gave us a little bit of a breakdown, a little order block at the top, traded back into that order block. Like I said, on the lower time frame, that order block is going to be consolidation on a lower time frame, okay? And so what we saw is they traded right back, and I'll prove it. You guys talking about you don't believe me. All right. bet. Show you belief. You don't want to not believe me. I do this. Does this. I'm going to show you. Mama ain't raised no, you're... Right? Here's our zone, right? Here's the same zone on a lower time frame, right? Got a level of accumulation, right? Just going back and forth for a while, right? Broke below it, right? And then they traded back up into it, retracement into a gap right here, fair value gap, right? Before they went ahead and expanded lower, right? So that's why I say whenever you have those order blocks, all the order blocks are areas of accumulation on a lower time frame, okay? And so they went ahead and came up there, and we had that was really a turtle soup, right? Because they took the low side, they took the high side of this accumulation, and then they expanded lower. It's literally the same thing happening over and over and over again, guys, right? And so with where we're at right now on the monthly, and I've been talking about this for a few weeks now, go back and watch our market outlooks, right? Is that we had a sense of an accumulation down here, we expanded, and now they're retracing, guys. I mean, it's just is what it is. They gotta retrace. Now, the interesting thing is that I feel as though we have enough. Like, we still have room where we could trade lower, and this is what I was explaining earlier. Is like, yeah, I would love a bullish dollar right now. It's just look at the 3 month, for example, right? It's just like we still have not really traded all the way back down to this level, this order block level down here on the 3 months. So I could see us trading back to that. Maybe even down into, these gaps down here, especially if you see the way that we created this order block here, traded back into it here, January, first quarter of this year. And then this, now just going ahead and seeing us give that expansion lower is what I'm seeing, especially you see the flat bottom of this candle. We never traded below the bottom of this candle, right? So overall, I definitely can see us getting some more bearish price action on DXY. But I love the momentum we getting right now. Thing about dollar, you just gotta always remember, dollar can do whatever it wants. All right, it's a lot of manipulation going on when it comes to this currency pair, so we just gotta read and react. Now, with that being said, for me, ideas, like I said, I kind of just want to see, are we going to trade up to this 106 level, to this high over here, previous, this 105.5 level? Are we going to trade up there, and are we going to break that, or are we just going to turtle soup it? Are we just going to wick and then trade back lower and then go ahead and give us that action? You know what I'm saying? Give that action. So with that being said, everything that I just showed you, I mean, the monthly time frame is cool and all, but like, it gives me an overall perspective of what to expect, so I'm not caught off guard. But I can't make money off that right now. Like, that's cool and everything, but it's not going to get me paid at this very moment in time. So with that being said, just know that we have this weekly order block that just got formed because we had these consolidation period from the beginning of the month. They expanded last week, and this right here would be the top, the last down move. I know there's two candles there, but just bear with me. You'll get it one day, right? Top of that was that last down move. So I will call this our weekly order block. All right. So I would expect for price to, in some way, shape, or form, trade back to that level. before expanding to any higher levels, if that's what they're looking to do. And like I told you guys, when you're trading retracements, just target the previous mitigation level or the previous order block before the drop, which is right here. Like I said, if they come up there, I got some watching to do, right? If they're coming up there, I got some watching to do. For right now, I'm just gonna see, okay, boom, are we gonna trade back to this level, right? Like that's all I need to pay attention to for right now. Right, are we gonna at least trade back to that level? But for one, we got some daily buy side liquidity here, so I'm gonna pay attention to that. We got buy side here, pay attention to that. Right, so I'm just gonna keep my eyes open. You know what I'm saying? Not gonna do too much, right? So on the daily, you can kind of see that for the past month or so, this is what our consolidation looks like. It's interesting because they kind of already like literally expanded past on the daily, like on the weekly. This is where the order block is, and so this is what I was kind of explaining just now when I was breaking down the phases of the market to you guys. On the weekly, we would want to see them trade back to down there. This is an example of a fair value gap right here. The top of this daily order block and the bottom of the candle right after the engulfing candle, or the candle that made it an order block. Right there, right? So that's a point of interest for me to take more buys from. Especially if we don't close, if we close above any of these areas, or if we don't get to, or we don't close above any of these areas, if I get like a wick, right, on any of that, that's opportunities for me to sell back to this zone. But what I'm pointing out on the daily is that you can see that in itself, this right here was a strong down move that brought us down here in the first place. Right here. This down move, I don't like that one yet. This down move right here, right? That brought us down here in the first place. And you can see we engulfed that right here. So in itself, and this whole thing, if you stretch over, was, we were consolidating in that range. So down there is cute, like it would like ideal, like it would be dope to come down there, but this is the dollar, man. You got to pay attention to everything. So I wouldn't be surprised. I'm depending like the time of day, and the day that we trade back to the top of this level is very important, right? Because that would be a key level. Like that in itself is a support zone for me right now, and I'll be paying attention to that. It would be dope to see them come into that fair value gap, but I'm not dependent on that. Gotta really be paying attention to the game. So like I said, that in itself could be our trade back to there. Literally come back to there 8:30 and 9 a.m. in the morning, New York kill zone, right when some news is happening. Yeah, nah. From there, I would be targeting buy side here, and clearly I don't actually trade the dollar. But anything that starts in USD, USD JPY, USD CAD, USD Chef, right? Anything like that, I'm going to be looking for the same trend that I'm looking for on the dollar. Anything that's inverse to the dollar, like gold, silver, US 30 indices, SPX 500, SPY, cryptos, right? I'm going to be looking for the opposite. You feel me? So if I'm expecting when dollar gets to here, if the dollar gets here and it shows me an accumulation on a lower time frame and I get an expansion, and you know what I'm looking for? I'm looking for bullish dollar. So that means I'm selling gold, I'm selling SPX, I'm selling indices, right? And that's what it is that I'm anticipating. Okay? So just really paying attention to that. Like I said, you got to read and react. Probably just stay out of this market unless you're going to trade the retracement, but just really sticking with this bullishness that they got going on. Just really just wait till Tuesday, till that Tuesday news release, and see where the market is at, so that you could really go ahead and take advantage of that opportunity for real, right? But yeah, I wouldn't even kill myself trying to see if they come to this fair value gap. Like, it's just good to have an understanding that these are here, right? It's just good to have that understanding. Let me actually pull this over here now that we're going down to the lower time frames. Right. So yeah, it's good that I have these zones in my mind, but you can already see, they kind of traded into this already on the 4-hour and expanded. We already traded down into this fair value gap on a 4-hour and expanded, right? So right now, the zone that I'm paying attention to is this one right here. Right, the top of this level right here, call it a fair value gap, call it whatever you want to call it. I'm paying attention to them retracing to this and giving me buy opportunities from that level to these, buy side up here, buy side up here. You can see right now on the 4-hour what they doing. Engulf low, came back into it right now. They gave a rejection, right? We got 3 hours left on this candle. Going into tomorrow, if we see bearishness on US dollar, you can expect to see them come back into this level. And we can really pay attention and be looking for that. And that can kind of help you guys out. Like I said, going into Monday, Tuesday, if we're trading into this level at our key kill zone times, 8:30 a.m., 10 a.m., 9:30 a.m., and we're trading into this level on the dollar, you can be looking for your sells on indices, on assets and everything like that, right? So that's the idea of what's going on with the dollar right now. I gave you guys the higher time frame play, but for right now, for this week, that's what you got to be paying attention to, is that 101.75 on the capital.com chart. On the trading view chart, let me see what level is that on the trading view chart, because everybody know the trading view chart, right? On the trading view chart, that's 102.145, right? 102.145 on the trading view chart. 102.145 and 101.73 on the capital.com chart. So yeah, just look out for those guys. Just look out for those. You guys saw the play. Y'all saw what gold had going on. She retraced, came back up, and now we are falling off from since what I went ahead and talked about when we first started up the call. We'll see what she want to do. Gold. I have been trading gold the past couple of weeks. I've been back on my BS with gold. I ain't going kizzy. Let me use another chart real quick. Yeah, so gold, they man, on this chart they took all-time highs. Hold on my other chart they didn't take all-time highs. So these charts be playing, man. I'm trying to tell y'all, these charts be playing. Who I'm supposed to trust? Right, on this chart, gold did not take all-time highs. So, we'll keep an eye on that. That kind of gives me a little bit of right. But me looking at her on this FX IDC chart, like, what is that? Man, let me check another gold chart real quick. Let's see who's lying here. Cause we gonna find out. If one thing I'm gonna find out who's lying. Right. Gold did take all-time highs on this chart as well. She took the all-time highs. Let me try one more. Let me try 8cap. That's our broker with the TFT and stuff. Okay, so it looks like we did get a wick on all-time highs. You just gotta look at a couple different charts, QB. You gotta dig into it. I didn't even realize now that I'm looking, but interesting. So it looks like we did get an all-time high on gold. Kind of want to go Google it. Google will tell you what happened for real. Shoot, let's go see. My computer's gonna be pissed. My computer hates when I do all of this on one thing. Be like, dude, like, make a decision, man. Like, what in the world, dude? You do not need this many things open, bro. Like, Let me bookmark this page. All right, gold all-time highs. $20.72, shy of a record high of $20.72.49. So yeah, it doesn't look like. Yeah, it doesn't look like the actual markets have registered gold taking true all-time highs yet. So shout out to Owanda, man, keeping it real with the people, right? Keeping it real with the people. So that's not an endorsement. They do not sponsor me. I'm not recommending them on any means. It's just the chart I'm looking at, guys. Right? So yeah. But interesting, you know, they kind of tried to show their hand a little bit with that. But whole point being, with gold, we did wick up, right, near to those all-time highs. They trying to act like they did take the all-time highs on here. That's cool. The fact that they even did that kind of makes me just want to believe that, like, they just wanted people to think that they did. So it's like, we'll drop now. So yeah, I could definitely see them going ahead and accelerating higher at some point. But back to the point in hand, gold inverse to the dollar, right? What the dollar does, gold typically does the opposite of. I've just been saying for a few weeks now, just be aware though, because when war is looming and stuff like that, man, gold could do whatever it want to do, because especially with what's going on with these BRICS nations and things of that nature, right? Gold can go up at the same time the dollar is going up. It's very much possible, right? So it kind of like messes up a little bit that correlation that we're able to use. But yeah, anyways, for me, what I saw is that gold, they took those all-time highs, they traded higher, whatever the case is. They gave us an engulfing candle lower here, traded back to the order block here, right, on a daily, right? And then they expanded lower back into, you know, I guess you would say this fair value gap, right, from the beginning of the month. So we could argue, right, they could get a foothold here. That's why I'm kind of like, I think I might leave gold alone unless they make it a little obvious for me. That's the reason you see, like, if it was going to be beautiful, then they would have just fell as soon as the market opened, because I had a really good entry. But they kind of messing with cats right now. But you can see that they did also give us another, I guess you could say, another order block with these candles here. You see, we retraced, right? So what I would call these is a mitigation, right? So they did go ahead and give a pullback here, give themselves some more sell entries inside of that right here, traded back to the order block, and then they dropped. And so this in itself is low key, right? Another order block or mitigation block, right? And you can see that they traded right back up into that, and that's what I sold off of on Friday, right? Was seeing them trade back into that, and from trading back into that, let me go back to the daily real quick, right? Did I skip a time frame? Okay, no, I didn't. Right, so seeing them trade back into that, right? So we had Thursday, they broke lower. Friday, they traded back to the order block. I'm taking all these entries. I don't care, right? It's how I'm doing it, right? So I took those, and my targets would then be minimum, right? The sell side liquidity here, right? Minimum, I wanted them to take that sell side liquidity. So daily sell side, I mean, you know, bonus would be them coming under all this, right? But that's a lot of resistance, a lot of highs for them to fight against. So I just tried to keep it simple, just seeing them come down below that sell side liquidity. And you can see the market did open up, man. They almost gave it to me. They came down to 2001, and then they went ahead and pulled back up and gave that same area of entry again. So I mean, it's still a valid move. I just don't really like the playing around, and it's a Sunday night, so like I'm not about to try to chase with them. Maybe if they give another opportunity in the morning or going into Tuesday, that would be cool. But yeah, like, you know, that's kind of what I was looking for, at least a 1 to 2, something of that nature, seeing them go ahead and attack these lows at 1998. So that would have been dope, but it's just really ugly right now. But you should be able to see what I'm putting down, right? But this is the type of thing where, like, as a beginner, it's like that's not something. There's no reason, right? Because at the end of the day, the market's been in an uptrend for, I mean, gold's been trending up since last year, August. Right, so like, just as a beginner, like, you're really just putting yourself in a world of hurt, looking for the sell opportunities. It's just because I've seen these things so many times that I'm willing to execute on that very small risk. But as a beginner, like I said, just stick to one type of setup, and that's not the setup that I would recommend. If you unless it's your specific setup, like I said, the turtle soup, right, which clearly catching the setup up here would have been, I mean, ideal. Catching those type of sells, and they in profit over 700 pips now, haven't traded back to that area at all. That would have been smooth, but it's not smooth. Right, so we'll leave gold alone. Something like EU is looking very pretty. Right, EU's looking very clean. Right, I wanted this. I talked about it last week. You can go look in the forum. I talked about EU sells last week. You kind of look at EU on a higher time frame. You can kind of see we've been trading up, right? Same thing as gold since like September of last year. We got higher highs, right? Traded back to the order block here, and then they expanded to the liquidity here, retraced, came back down, gave us a expansion again, and then they went ahead and traded above this weekly buy side liquidity, maybe even monthly. No? Okay. The monthly don't make it like they done. And this goes back to what I was just saying about the dollar. But sticking to the weekly for right now, you can see that they just went ahead and traded above this weekly buy side liquidity right here. Right, we got some weekly buy side liquidity that we traded above right here. From these highs over here, where we went ahead and dropped off. I guess you could say like this was our last uptrend on it back in 2020. Right here, pandemic started March 2020. We traded up to the highs of the pandemic right here, January 2021, and from that high January 2021, down to the lows over here. Right, I told you guys about discount earlier, because as a buyer you're gonna want a discount, but as a seller you're gonna want premiums. Right, as a seller you're gonna want premiums, and you can see EU traded right into above that 50%. So we're getting some nice sells right now. But like I said, with the dollar, looking at the higher time frame, I think we got a little bit more room. They can go ahead and come up above, up into this 60%, above the 70% up there. And if I go to the monthly time frame, it'll maybe give us more of a confirmation. Right, from this order block they traded back into right here, when we traded back down into it right here, we still haven't traded back to traded to the liquidity, because like I said, you're always going to be looking for from an expansion, you're always going to be looking for them to trade to a level of liquidity, right? So definitely could say there's liquidity up there for us to get, especially looking at the monthly time frame. So definitely we'll see how the dollar reacts this week. Are we just gonna, like I said, go above those 106 levels, so EU really will just continue to sell off, or will the dollar go ahead and just flirt with those levels and go ahead and continue to drop and give us a little bit more bullishness? But looking at this week right now, all you need to pay attention to for right now is the fact that 4 phases of the market. We expanded here, right? They retraced here. They expanded again here. They retraced here. Expanded again here into what? Weekly buy side liquidity. And then they consolidated, right? And then they wicked, right, to one direction on the highs. And then we went ahead and expanded lower, right? And so right now, out of that consolidation that we just expanded from, we're expanding lower. How should I map this? Like, right, that being the last up move right there, and you can see we traded lower underneath it, traded right back up into it right here, right, and then we went ahead and sold off heavily, right, heavily. Okay, so now I'm just paying attention to where, you know, where can my targets be on these cells, which of course is, right, we got, I'm sorry, my back, we going crazy, right? So right here, we got daily sell side liquidity here. Oh, okay, that's why they got me messed up. Messing up my people. All right, so we got daily sell side there, right? We got targets here, right, to pay attention to. All right, got targets there. All right, targets down here. All right, it's very similar, isn't it? It's very similar, isn't it, to the dollar, right? Where we have multiple levels of buy side liquidity for us to attack. So this is why I say if the dollar gives us those confirmations we're looking for on that pullback, aka the dollar goes ahead and pulls back to an area like here, like this level that we're looking at, right? The top of this level, right? And we give a reaction right there at the same time that EURUSD is giving us a pullback to, right, inside this level right here, because we expanded. Right now, the fair value gap I'll be paying attention to would be in here. Right, inside that level, I'll probably go down to the 4 hour, make it a little cleaner. Right, so out of that expansion that we got lower, I'll be paying attention to that gap right there. Bingo. Right, and you can see in the past, this is right here is that move where we traded back into it. Right, and they just clean how they dropped below. And then they came back up where? Right into the order block, right? Almost just a bit. They really didn't even come all the way up to it because I'll draw a line over for you guys. You guys can see right here. Boom. They never really traded back to that thing, right? Never really traded back up to that thing, right? Never really traded back up to that thing. So, yeah. I mean, she could just continue to fall out of the sky, but there wouldn't be no opportunity for nobody, right? So would love to see some type of a pullback, right? Essentially coming up there, but just depending on the timing, right? Are we gonna come back all the way, right, to this AKA mitigation level? And let me give you guys that cheat code. Like I said, right, take my fibs from the high down to the low, and look at that, right, in the premium, right? So EU comes back up into these at the same time dollar's giving me confirmations for lower lows. I'm looking for EU sells on that type of time, right? But if we come into that just like, you know, if depending on the way, like if the dollar doesn't hold that level, dollar just starts dropping, we're getting strong structure of dollar going lower, then I'll be looking at this whole thing to just be a sweep below these, you know, this whole consolidation here, right? This whole thing, it could just be a sweep, but I like the bearishness, but I'm just saying, I'm anticipatory skills, right? You got to be ready for anything. So I would be, you know, able to just pay attention and know, you know, does the dollar give us that? And we pull up into that with confirmations for the continued sells, or do we just get a massive, you know, expansion higher? And then I'll be looking at this as an, you know, this whole thing as an order block for me to take the buys from. But for right now, we're paying attention to the sells until we're invalidated, right? If we get invalidated, we'll shift our bias, shift our perspective, and we'll look for it the other way. But that's what I see right now on EU. And you guys, I mean, you guys know you could drop your charts in the forum. I can't look at every pair, right? So I looked at EU, I looked at gold. If y'all see anything on AU, if you see anything on USD CAD, man, just drop them in the chat. You can let me know. We can talk about it, whatever the case is. But I primarily trade gold, EU, NASDAQ, you know, GJ, USD, JPY. Those are the main things I trade, right? I'll look at US 30 because US 30 kind of controls it not controls the other floor of the other indices, but it's kind of the base asset, the same way that we look at the DXY for everything else. The other indices should correlate with US 30, but they haven't been. Look, they've been acting weird. You see that? You see, like, US 30 looks like she's been kind of trading lower. Oh, let me close Brave now. US 30 look like she's been kind of trading lower, and I'm gonna actually go to my other indices chart. put this in here. So I don't like to mess with my personal charts too much. Right, but yeah, you look at US 30 versus NASDAQ. NASDAQ's been going higher. US 30 been acting like she's just going lower. That typically means we're going to get a reversal. That's typically what that means. It means indices, smart money is actually in the markets. So I'm looking for, you just saw, if we want higher on dollar, we want sells on indices. You feel me? So there's a lot of excitement right now with the AI space, because NASDAQ is the tech industry. So I could definitely see why they're expanding so heavily compared to the other indices. But at the end of the day, because like you see, what's this? SPX 500 is kind of consolidating just a little bit. US 30 consolidating, giving us a lower low just a little bit, while NASDAQ just seems to be just trading higher and higher and higher, right? So when we see signs like that, at the end of the day, I'm going to be paying attention to, like I said, turtle soups, right? Turtle soups. So anywhere up, just paying attention to how the dollar's moving and everything else is moving. Once NASDAQ actually trades above that level. But forgetting all the correlation and stuff like that, I wouldn't be surprised to see, continue to see NASDAQ be bullish up until that zone. I'm just going to be honest. I said this like 2 weeks ago to my friend. He wasn't vibing with me. But I said the same thing. I was like, man, look, I can see it, right? We in expansionary phase. Look, NASDAQ consolidated here, right? She consolidated there. And then you can see we did what? Swept the low side, expand. Guys, it literally happens over and over again. I can't make this stuff up, right? Literally expanded lower, swept liquidity to the downside into previous fair value gap. That's our retracement, right? Boom. Fair value gap, swept liquidity, expanded, traded back down into what? The order block, expanded, traded back down into what? The order block, expanded, traded back down into what? The fair value gap. So what's next, right? What's next, right? We can get nice expansions on that on NASDAQ this week. Wouldn't be surprised at all. But yeah, we're definitely not correlating with US 30 right now when it comes to NASDAQ. They've been doing a little bit of whatever they want. So yeah, we'll see how this week transpires. Yeah, we'll see how this week transpires, man. We shall see, because they are starting to show breaks of structure, like I said, because they can't just keep going against US 30 forever. We are starting to see a little bit of a break of structure. Today's Sunday, so it's a good thing we get some time to see what's going on. But you can kind of see they kind of gave us a lower lows here, traded back up into what was previous, some type of mitigation here. I would pay attention to how we left this, how we're trading back into this whole thing. It's kind of like an order block. And kind of rejecting from it, trading back into it. So going into tomorrow, I guess we'll see, how determined they are when it comes to this zone, right? Do we want to reject from it and continue in the footsteps of US 30, where we're starting to see the reversal already play out? We're already starting to see US 30 kind of start to give us lower lows, lower highs, right? Potential lower low, lower high, right? And kind of seeing her continue to drop. Right, US 30 got a gap up here. Maybe we trade back up to that gap at the same time. Like I said, NASDAQ could go ahead and come back higher, trade from there. But the phase of the market that we're in right now, because we got lower low, we got lower high, right? So the phase that we're in with the market right now is with indices specifically. Currencies is very clear to me. Indices is very reactionary. You got to just read and react when it comes to these guys right now. So yeah, that's what I got for y'all. We've been on here for about an hour and a half. Hope y'all got some game. Go watch the recording. I'll drop it on YouTube in a few. And yeah, man, this is some good stuff. Excited for this week. Won't be on. If I hop on the trading floor in the morning, it'll just be on some stuff like just to see if anybody else is trading. But for real, I'll be on the trading floor Tuesday, 8:15 a.m. Tomorrow, Monday, 6 p.m. Eastern. We got our Q&A session. So y'all can hop on there if y'all got questions, y'all want to talk about anything. Like I said, if you're watching a recording, if you're on YouTube, if you're not a member of the guild, you want to be a member of the guild, you can go ahead and check out the link in our description, the link down in the description, so that you can go ahead and join the server. You can get access to these market outlooks with us, where you can, hop on live with us every Sunday, 10 p.m. We do them live. That's free. Anybody in the Discord has access to that. But if you want access to our weekly schedule, Mondays and Fridays, 6 p.m., we do Q&As. Tuesday through Thursday, 6 p.m., we do market review. You feel me? And I trade live on the trading floor on my trading days. You feel me? We trade as a squad. If you guys want access to that, you can go ahead and join the Traders Guild and actually go ahead and become a member. You feel me? But that's what we got going on for this week, guys. Definitely excited to see what happens. And I'll see you guys next Sunday at 10 p.m. Eastern for our next market outlook. You feel me? Let's get it.